Let's talk to Babangida Yahya now, the head depository services, Central Securities Clearing System. That's the CSCS PLC. Great to have you on the show. Good morning.
Good morning, Ladi. I hope you can hear me.
I can hear you loud and clear. It's great to have you. And, you know, definitely talking about investor confidence at this point, if you look at what the data is saying, you know, right now about Nigeria's equities market, we see the all-share index at, you know, an all-time high at this point, and it's up about 41.9% year to date. Market cap sitting at 92 trillion naira. And we're also seeing capital importation data showing where investors are putting money, you know, when it comes to the Nigerian economy. We see portfolio investments, about $5.2 billion. Money market instruments, $4.2 billion. Bonds got $877 million in the first quarter of 2025. But we see equities there getting $117 million, smaller, you know, than the rest. So I'll pose it to you now. Talking about investor confidence in the equities market, what is this figures telling you? Seeing the equities there smaller, 117 million, but we see the all-share index at all-time highs. What are you seeing?
Hey, thank you very much, Ladi. I hope you can still hear me.
Yes, I can hear you loud and clear. You can carry on.
Yeah, so you rightly highlighted the performance of the capital market over the past couple of within this period, as we've seen, the significance of the performance has been very, very impressive, obviously. And I think that that is largely, you know, driven by investor confidence in the market. We see that investors continue to come into the market to invest, you know, and obviously there are a couple of drivers for this investor confidence. I think one of which I'll highlight is perhaps the macroeconomic stability. As you agree with me, investor sentiment, you know, is closely tied to the broader economic environment. So, for example, high inflation, things like volatile foreign exchange rates, and unpredictable interest rate movements can erode confidence, right? While on the other hand, you know, stability in these areas also foster long-term investment. So in Nigeria, for example, you can see the coordinated efforts of the federal government, you know, and the central bank, and how it has become essential in ensuring that, you know, it provides and ensuring stable macroeconomic indicators. Obviously, these policies, you know, which are aimed at improving be it FX liquidity or curbing inflation, you know, are very key in building, you know, and sustaining trust in the market. I think another area I would like to highlight is what we've seen around regulatory clarity and consistency, right? Again, you agree with me, clear, transparent, and consistent enforcement regulations reduce uncertainty for market participants. The Securities and Exchange Commission, SEC, you know, in a collaboration with other market bodies, continue to strengthen market rules, continue to enhance disclosure requirements, and even continue to enforce compliance measures that safeguard investor interests. I think all of these things are critical. And let me also highlight, of course, the importance of strong corporate governance. Of course, good governance in listed companies continue to remain a decisive factor in attracting and retaining investors. And as you know, the NGX, you know, as part of its recent rules, you know, has a very strong corporate governance requirement, you know, and all of these corporate governance principles ensure transparency, you know, accountability, a fair treatment of shareholders. And I think all of these factors are very critical. You can't also take away the factor around, you know, the market infrastructure. So having a very robust market infrastructure also brings a lot of investor confidence. You know, an efficient, transparent, and secure post-trade environment is a cornerstone of every investor, you know, confidence. The CSCS, you know, and other market infrastructures, as you know, plays a very vital role in ensuring seamless clearing, settlement, and custody of securities. And the reliability of this infrastructure reduces operational risk, also increases transaction efficiency, and reassures investors that their assets are protected, and accurately accounted for. I think all of this dovetails into the performance that we can see, as you rightly highlighted today.
Still, looking at the data, at this point, $5.2 billion when it comes to portfolio investments. And we know we've had the argument that, okay, fine, FPI rising, not so bad. But, at the same time, it's been described as hot money. It's money that, comes in and, ultimately finds its way out, of the economy. So, in your opinion, at this point, we're in a bull market, right now. That's looking at the equities market, looking at where we are right now. It seems the all-share index is in price discovery. And I'm wondering, your platform, financial market infrastructure, and you cover post-trade activities. So I'm trying to imagine what happens in a bull market like we're seeing right now. Is that like more work for you guys? Is that more work for the CSCS, when there's a bull market?
Hello, Ladi?
I don't know if you can hear me, but I was asking you, since we're in a bull market right now, looking at where the NGX all-share index is, we're seeing really bullish sentiment in 2025, if you're starting looking at it from the year-to-date performance. So is it more work for you in a bull market? So that's for the CSCS. I don't know if you can hear me.
Hello, Ladi. So I can hear you, but you keep breaking off.
Okay, I said, is it more work in a bull market for the CSCS, or like a bear market?
Okay. So yes, I did mention earlier that the post-trade entities play a very crucial role in what you see around the performance of the market today. The CSCS, as you know, is a CSD and a post-trade platform as well. I wouldn't say that it's more work. The CSD, which is CSCS particularly, has been well positioned, ahead of these trends, that we can see today. The CSD, which is CSCS, has heavily invested, in providing an efficient post-trade platform for the market, a huge investment around technology. As you know, technology has become a key driver of enabling businesses, and there's a lot of investment that the CSS has undertaken in this regard. And of course, even from the perspective of the people, the CSS has invested heavily in the human resources, and of course, in addition to some of the very crucial roles and collaborative partnerships that we've taken on, be it from within the domestic space or even internationally, to be able to share practices, to be able to share knowledge, and all of that. I think I would say that it's something that we've been well positioned and prepared for. I don't see it as much work or additional work. I think this is what we had always anticipated. This is what we're prepared for, and we're happy, about the trends. And we will continue to invest to ensure that, these trends are sustained, to the best of our capabilities within our own influence, space of influence within the market.
And do you think, we should be worried, seeing that portfolio investment is over 92% of capital imported into the country, trumping foreign direct investment? How are you seeing that?
No, absolutely. You've seen from the numbers you've shared that there's some sort of focus has been redirected to our market from the FPIs, the foreign portfolio investors. Obviously, it's a sign of good things happening in the market. The fundamentals are strong, and obviously, from what we see, this trend, this trajectory is on a growing basis. And so, to my own mind, from where I sit, I think that we'll continue to see more participation from this segment of the market. Fundamentals are right. The infrastructures are in place. The rules are robust. The regulators have the appropriate level of oversight, and all of this. And I think I keep saying the same thing. It just boils down to investor confidence, and we think that this trajectory will continue.
All right, so see, the Nigerian market is preparing for a transition to, a shorter settlement cycle. That's by November 28th. From a market readiness standpoint, what would you say are the key, operational and infrastructural investments, required? And what is CSCS doing, to achieve this? Because that means we're cutting off, 1 day delay when you make a trade, or maybe you're trying to buy or sell securities.
Yes, so you're right. And on that settlement cycle, let me start by commending, the effort of the Securities and Exchange Commission. I would say that we do have a forward-thinking Securities and Exchange Commission. Globally, if you look at what is happening globally, settlement cycles are shortening, right? And the Nigerian market is also not left behind. So the SEC has actually approved for the settlement cycle of the equities market to be shortened from the current T+3 to 2+2, no later than November 28th, 2025. And I will say to you that a team has been doing a lot of work over the past 1 to 2 years around reviewing this settlement cycle, and that team has also swung into implementation phase. It's a market focused team. The team is composed of various stakeholders from across the entire breadth of the market, including the regulator itself, the exchanges, the registrars, the brokerage community, the custodians, and a host of others. And I will assure you that in terms of implementation, there are critical enabling factors, success factors, and all of these factors have been considered by this team that is driving the implementation. So, for example, I'll say to you that one of the critical factors is to be able to put in place, system upgrades that will facilitate straight-through processing, right? With a shorter settlement cycle, it obviously demands seamless integration from the point of trade execution to final settlement. And CSS has been enhancing its technology, its platforms, and just to ensure that STP, is fulfilled, ensuring that trade flows automatically through that matching, clearing, and settlement without unnecessary delays. This is a very crucial factor, and in addition to that, let me also talk about process automation. The more you're able to remove manual interventions, the better you're able to seamlessly, transit to a shorter settlement cycle. So manual interventions, of course, are one of the biggest obstacles to meeting shorter settlement cycles. And by automating, key processes such as trade confirmations, reconciliations, payment instructions, you're able to achieve a more seamless integration. And of course, CSCS, again, and other market participants, are working at eliminating all of these bottlenecks, just in a bid to increase operational efficiency.
Right.
Another key aspect that, of course, let me just also mention is around the regulatory adjustments and alignment. With the transition to a shorter settlement cycle, obviously you expect some changes, around regulatory and payment frameworks, for example. And of course, CSCS, again, is also working closely with the likes of the Securities and Exchange Commission, the Central Bank, just to ensure that from a legal compliance and liquidity perspective, all of these things are taken into account in a manner that supports, faster settlements.
Right, and definitely.
Lastly, I think it's important, I'd like you to also emphasize the importance of market-wide simulation and testing, and this has been, factored into the implementation plan. There will be an extensive market-wide testing simulation, just to ensure that whatever could have gone wrong can be earlier detected, and addressed even ahead of the transitioning.
Right, simulations are definitely good, and we know, T+2 is great. We're looking forward to that, but I know the Oliver twist in some investors now will be hoping for a T. That's instant settlement, at some point. I hope we get there soon. But thank you so much, Babangida Yahya, as a head, Depository Services, CSCS PLC. Thank you so much for coming on today.
Thank you very much, Lydia, and thanks for having me.